Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader that you can possibly become. And what does that mean to become a backpack trader? It means stop spending 90 hours a week in front of the computer screen trying to force it to give you a winning trade. It means stop making yourself absolutely nuts with overanalysis and then suffering from paralysis. It means reclaiming your time and gaining complete financial freedom. Backpack trader. That's right. That's what we do. That's what we want for you. Yes, it is the final week, at least unofficially, of summer coming up to Labor Day. Many parts of the country, school's already in session. For those who aren't, well, come next Tuesday, a week from today, that'll change. Just about everyone will be back. This is a busy week, though, for not so much for trading, but for holiday goers, especially in Western Europe. Pretty much shut down for that final week coming into the end of August. Looking at a round robin of holiday travel-related entertainment style stocks and companies. Interesting, we keep hearing about this revenge travel. There's been nonstop talk for 6 months about post-COVID breakouts all around the world. Well, okay, check this out though. These stocks, these companies, they're not doing well. Okay, here's a basket of the airline companies. They're barely off their 52-week lows. Here's a couple of cruise lines. This one, that's at a 52-week low with just a slight twist of the anchor. Another one, Royal Caribbean. Ugh. Here's Las Vegas Sands. This one doesn't look terrible, but not real healthy. Here's another casino company. How about Marriott Hotels? Nope. So tell me, if all this revenge travel is taking the world by storm and these companies should be in a prime position, what's going to be happening in just a couple of months when there's a little bit more of an economic slowdown? How about real trouble? That's right. Can you spell trouble? Down stock. That's how you spell it. Down stock. So while there might be some bottom fishing going on in a company like Carnival Cruise, this is not a company or an industry that is worth any type of intermediate or longer term money for a while. Be very, very careful with these travel related revenge, post-COVID, moving about the world type of trade. Now, some analyst traders out there talking about a test of the 50-day moving average. You can see the gold line, the NASDAQ 100, the big NASDAQ index, both touching the 50-day moving averages, Russell 2000, some space. Dow Jones touching it, closing right on it, S&P 500, a little bit of space in there. So with today's bounce, albeit it's early in the morning so far, market's not even officially open quite yet, there is talk about, a successful test, so here we go, everything's fine. And that would be a premature green light call. Looks like there's still some wreckage on the track that needs to be cleared at the very least. Also, a couple of days left in the summer. There will be light volume. There will be a lack of general activity. One thing that it seems like your old buddy Romulus is the only one really talking about it out there, and we've been discussing this for several weeks now. See this? This is called an ascending. That's right, ascending, because it's going which way? Up, up, up. It's going up. Woo-hoo, how about that? The bottoms are going up. The top is flat. This is the U.S. 2-year. This is what the U.S. federal government pays in interest to borrow money for 2 years, 3.44%. So it broke out of the top of this ascending triangle a couple of trading days ago. It looks like it's going to be going higher. There's a measurable factor to this that's we can get into it some other time, but the measurable factor means the rates are going higher. Nobody seems to be talking about that too much. Even though oil prices are down a little bit today, they are up from lows, and there are calls in some corners of the Wall Street universe, institutionally speaking, that see oil prices over the next, let's say, remainder of the year, 4 months, basically, going significantly higher. If that's the case, the Federal Reserve's quest for their holy grail, which is 2% persistent and consistent inflation, is going to remain out of reach for a long time. It also means that they're going to have to raise rates a lot more than what most people believe, think, or hope will happen. Still not ready to just suggest that the markets are going to be breaking down through the June lows with aggression and heading significantly lower. As I've said for some time, we should expect some kind of a test of these lows, but that could be up here, that could be down here, anywhere in between. So still kind of on that boat. And again, that could be happening sometime within the next 5 or 6 weeks. Hopefully, you're able to spend the last couple of days of the unofficial ending of summer at a place like this, beach. I'm not going to the beach this weekend. I've got a big beach trip planned for early October, going to North Carolina. Yes, North Carolina. Been there a few times, out at the Barrier Islands, which is called Outer Banks neighborhood, and also a couple of trips to major cities like Durham and the Tri-Cities areas there. This time we're going to be going to the beach in North Carolina. I'll show you where we're going to be going. Just give me a minute. We're going to Wrightsville Beach, which is a little beach town near the bigger metropolitan area called Wilmington, North Carolina. It's kind of on the southern end of the state. So you see a lot of beaches out there. This should be a great trip. We're going to be spending 4 days on the beach, and then we're going inland for a bit. We've got a visit to the Asheville area. Heard there's a couple of cool things to do there. That's right. I'm bringing my bicycle also, not just to get out and about on the beach towns, but also when we get to the mountains. It's going to be early October. Weather should be great. And I've heard there's some excellent mountain biking and trail riding through that area. So that's coming up in a couple of weeks. That's why there's no big beach visit for me this particular weekend. Otherwise, market activity, most people waiting for different employment data. Federal Reserve's got their eye on a couple of these things. There's a big debate out there whether they're going to raise 50 basis points or 75 basis points. That's kind of irrelevant. They're continuing to raise interest rates. That's what matters. And starting on Thursday with September, they're going to begin draining $95 billion a month from the system, as opposed to what they were doing a year ago, which was adding $120 billion to the system. Imagine that kind of flick on its head. Don't forget, there is still this yield inversion that has been in place since the beginning of July. The 2-year is yielding higher than the 10-year. That typically portends a recession. And now we're getting closer to the point where that will be a problem. Of course, there should be an official recession because the first 2 quarters of 2022 demonstrated a drop in GDP growth. But the economic board that actually calls recessions, they haven't done it yet. Either way, most people have jobs. Job market's still robust. Paychecks are still coming in. So your average American worker doesn't feel like they're in a recession. So it probably means we're not in one. Well, I hope that you never have to feel the effects of a recession, either in your job or trading or investing. And I hope that you are going to be sitting on a beach just like this for the rest of the week. And I hope that you join me again when I come back. That'll be tomorrow. But I won't blame you if you don't until I see you next week, because you should be on the beach. That's all for now.